Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me as always is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
The big story from overnight has to do with crude oil prices, with the extension of the cuts by Saudi Arabia and of course OPEC Plus and Russia on the other side extending all the way to December. And that has an implication for crude oil prices. Brent crude above $90 to the barrel with a weaker rupee, bless you, with the weaker rupee and the higher crude prices is not the best news for the Indian economy.
Absolutely. I mean, it's bless us now for the way crude has been moving, the rupee. So these are the two factors that could actually play spoilsport from here on as well, because the kind of reaction it could have, not only from individual stock perspective, but even from
At
the
the sentiment
calculations at the sentiment level, as well as from a macro perspective, the way you're going to calculate your inflation, the numbers that we've taken into consideration, a lot of things can change if it sustains above those 90 levels already.
And in the very short term, since Friday, you've seen an up move in the benchmark as well as the broader markets. That continued yesterday. You saw just about 0.25% gains for the benchmark index. Quite a lot of interesting play. And yesterday you were talking to, or rather day before you were talking to technical experts that were pointing to the possibility of us hitting 20,400 by the end of September. Perhaps we'll have to relook at those.
Absolutely. And with that, if you see, the markets have continued to remain range bound. So that is one aspect that we need to consider, but the bias continues to remain positive as well. Now, clearly, if you see, we've closed below that 19,600 mark marginally in trade yesterday. The broader markets, as always, have continued to outperform. And it's a 4-week high that we are seeing in terms of Indian stocks. The FI flows, which we were betting big on, now that could be impacted as well on the way the rupee has been panning out. So that's going to be a sharp, key monitorable for us to watch out for as to how volatile the rupee remains, as well as the kind of impact it is having on the FI flows as well. But overall, we are comfortably trading above the 50 and the 20 DSMA. 19,500 is going to now become the key support level in terms of Nifty 50. But if we continue to trade below 19,500, then the bulls may actually prefer to exit their long positions, and that could become a negative sentiment, which could pull us lower as well. Moving on, if you see in terms of the options data, the highest put OI is at 19,500, whereas the highest call OI is at levels of around 19,600. Looking at individual stocks, which have actually risen with high volumes, you have Aditya Birla Fashion, Z Entertainment, Jubilant Foodwork, Petronet LNG, as well as Glenmark Pharma. So these are a few of the names that we will continue to monitor in today's session as well. But with all of this, taking into consideration the way crude prices are panning out, one of the key monitorables from here on is going to be, as we mentioned about inflation, rainfall has been a negative as well in the month of August, but it's augured well in terms of cement players, Alex.
Yes. So we've seen that there have been price increases. And even if you look at the basket of stocks, the likes of Ultratech Cement, ACC, as well as Shree Cement in particular, the month of September so far has been a very good start for them. And this is, of course, as I mentioned, on account of those price increases after a bit of a lull in August. We've got Rishi standing by to lay the context for what will hopefully be a very interesting conversation for you to watch. But Rishi, cement, as Hiral pointed out in focus, what is the context that you can tell us about?
So recently, that is in September, at the start of September, cement makers have hiked the prices by about 10 to 35 rupees per bag. Now, this is because they are expecting the strong construction demand to continue, given that the monsoons have already remained weak. So a weaker monsoon has also ensured that the constructions are less interrupted, and therefore it has augured well for cement players. Now, what remains to be seen is how much of the price hike is actually absorbed, because even if you see in August, the prices actually declined by about 1 to 2% since July, and for the quarter as well, the prices have been higher in only 2 of the 5 regions. Now, volumes were the highlight for the cement companies in the first quarter, and analysts expect the strong volumes to drive Q2 performance as well. Now, this is because apart from the weaker monsoons, this is also a pre-election year where there's a lot of boost for infrastructure than usual. So that is also driving a lot of volumes. According to MK's checks, volumes have already grown in low teens year on year in Q2 up till now, with East and West regions are likely to lead in volumes. Accordingly, FY24 is also likely to be the third consecutive year of strong demand with a double-digit volume growth. Now, despite the recent uptick in petcoke prices, from their bottom, input costs are still expected to be much lower this quarter, and accordingly, the margins are expected to improve. But however, the extent of margin improvement will all depend on how much of the price hike is actually absorbed.
That's going to be an interesting factor to watch out for as well. Thank you, Rishi, for getting us all the details. But now let's welcome in our guest as well. Joining us on the show now, we have Ronald Siyoni, Associate Vice President, Research Analyst, Sharekhan by BNP Paribas. Ronald, good morning and thank you for joining us.
Yeah, good morning.
Ronald, my first question coming to you is, Rishi was just taking us through the kind of price hikes that have been taken in the month of September, around 10 to 35 rupees per bag is what we are looking at. Now, the first question is, are markets ready to absorb this price hike as of now, taking the way the demand has been panning out?
Yes, so on the demand front, as we have seen, July, has been impacted by monsoons. But if we see the cement transported through rail in the month of August, which has seen a 10 to 11% YY growth and about 8 to 9% month-on-month growth. So August has been a good month in terms of demand, and September is also expected to see a 10%, around 10% kind of YY growth for cement players. So this has been the key factor in letting the cement players drive month of August and good demand. Apart from there is a uptick in petcoke and coal prices, which we have seen during the month of August and September. So these three factors have led to a little bit uptick in September prices, especially in the eastern region, where we have seen 35 rupees per bag increase from the first week of September. So another 35 rupees per bag they are planning by the weekend. So, but we need to check whether such a big hike can be absorbed in the September month.
So, Ronald, what are the implications of what you're talking about right now? One, on the input cost side, and also the attempts by the cement companies to raise prices on the operations for this quarter as well as the rest of the financial year. Are you changing your base case assumptions at all? And what are your top picks in terms of performance? We'll get to stock price in a bit, but performance and operations, what, according to you, will stand out?
So this quarter's performance, demand environment continues to be good, so this should augur well. Cement prices also, expected to be a little bit flattish because of, there was a little bit downturn in August, but July and September months are going to be good in terms of prices. So a little bit flattish kind of quarter-on-quarter realizations can be expected during this quarter, apart from the healthy volume growth. Despite the seasonally weak quarter, which is quarter two. So historically, comparing this quarter to the previous periods, this quarter should be a better in terms of volumes and realization. But on the input cost front, the petcoke and coal prices, the companies would have procured at lower prices than what they are trading right now. So this over the last 6 months or so. So this would get reflected in this quarter, in quarter two. So you should also expect sequential decline in power and fuel costs this quarter. So this all should help in improvement in operational profitability, but we cannot compare it quarter on quarter, but a seasonal comparison, this quarter two should be better in terms of overall performance, in terms of say volumes or say realizations or input cost. But the recent uptick in the petcoke or coal prices would start getting reflected from quarter four onwards. So quarter two and quarter three are expected to be good enough in terms of input cost pressures. If I talk about petcoke prices, like domestic petcoke prices, have risen by about, they are up by about 20% from the recent lows which we had seen during June, July months. But they are still trading lower by about 35-36% from the high we have seen last year. So also coal prices, they are up 25% from the lows which we had seen in June, July. So yes, the petcoke prices and coal prices are up 20 to 25% from the lows, but they are still trading lower compared to YOY.
Right. So overall, help us understand now from a stock specific perspective, with the kind of move that we've already seen in the last 1 month, and where valuations stand, which cement companies would be good, buying opportunities at current levels as well, if you have to take the next 6 to 8 months into perspective.
Yes, so rightly, post the news regarding, the increase in cement prices, the stocks have, run up a little bit in the recent period. But still, now when after this H2, people will look forward to, September 2025 earnings or maybe FY26 valuations, because the growth story is a longer story over the 5 years kind of structural growth story. So the people may not, look over the near term, say for FY25 kind of earnings multiple. So hence, the earnings, the multiples valuations would get shifted to September 25 or say FY26 earnings, and this should leave an upside on many of the stocks. So currently we have a buy rating on Ultratech, we have a buy rating on Ramco Cement, JK Lakshmi Cement, while we have a hold rating on Sri Cement and Dalmia Bharat because of the valuations they are trading at. But for Ultratech, Dalmia Bharat and JK Lakshmi Cement, for Ultratech, JK Lakshmi Cement and the Ramco Cement, we are positive on the outlook going ahead. And we have a buy recommendation on these stocks.
All right. Thanks so much, Ronald, for giving us those updates and, in fact, for sharing your calls. Let's shift gears and talk about a stock that we've been speaking about for a few weeks now. It has, if you can call it that, overstayed its welcome on some of the indices. Geo Financial Services made its way off the BSE indices, and now we've got a date for the NSE indices as well. We've got Himansh to give us some perspective on that. Himansh, morning. What are you picking
Good morning,
up?
Alex. So, Geo Financial Services, one can say the stock has had a very bumpy ride since its listing. So, JFS shares are expected to be removed from NSE indices from tomorrow onwards, as the shares did not hit the price band for 2 consecutive trading sessions, which was on Monday and Tuesday. Now, the stock has lost its value from its listing price of 265, and it has wiped almost 6,200 crores in terms of market capitalization. Now, the delisting was expected with several index funds selling, leading to the stock being locked in the lower circuit for as much as 5 consecutive sessions in its early days. This kept delaying the removal process from these indices. Now, it's not just like you mentioned, BSE removed JFS from its indices on September 1, and other indexes such as FTSE and MSCI, although continue to retain JFS on their indices. Nuvama Wealth expects passive funds to adjust their I'm so sorry for that. To adjust their index weights during the last 30 minutes of trade today. It estimates that passive funds will need to sell about 105 million worth of JFS shares, which are valued at approximately 2,700 crores. They expect that with the revised 20% price band from BSE, now the exclusion process of JFS will be much easier going forward.
Right, so that's going to be interesting to watch out for as well, because initially we always saw it locked in lower circuits. Then it started to see that kind of up move as well. So the kind of market cap erosion or addition is going to be interesting to calculate and watch out for in terms of a GFS and what the shareholders have made out of it.
And once
as well.
things settle, right? So once all of the selling by the passive funds gets done, then you can actually see where the price settles eventually, and also business updates that will follow in the coming weeks. There is a lot of buzz about acquisitions that could be taking place.
Absolutely. Acquisitions, as well as the way they're planning to strategize in terms of formation of the various verticals.
And key management personnel.
As well. Exactly. So a lot of things that could be brewing with regards to a JFS. Thank you, Himansh, for getting us the details. But moving on, a lot of other names that will continue to remain in focus in today's session. You have the likes of NBCC, Vedanta. These are a few of the names which Siyoni has been tracking. Good morning, Siyoni. What do you have for us?
Good morning, Hero. So we have a lot of companies across various sectors in focus today. So first we've got Vedanta. So the company will restart its copper operations in Zambia after the Zambian government made a decision in favor of the company. The ownership and management of Konkala copper mines has been returned to the company by the government of Zambia. Konkola Copper Mines is a world-class asset having reserves of 16 million tons of contained copper, and it has a copper grade of 2.3%. Currently, India is over 90% dependent on imports for copper concentrate and over 40% dependent on imports for finished copper. So this is going to be an interesting stock to watch out for in trade today. Then we've got NBCC India that signed a memorandum of understanding with Kerala State Housing Board. So this MOU is for the development of 17.9 acres of land parcel of Kerala State Housing Board in Kochi. This project is valued at approximately 2,000 crores. Then we've got GAIL. So the Central Bureau of Investigation arrested KB Singh, the executive director of GAIL, and 3 other GAIL personnel in an alleged 50 lakh bribery case. Additionally, 2 other people from outside the company were also arrested. It is alleged that these bribes were offered to a Vadodara-based company for the contract of 2 pipeline projects. Fourth, we've got Power Grid Corporation of India that was declared as a successful bidder under the tariff-based competitive bidding to establish an interstate transmission project for the evacuation of power from the renewable energy zone in Rajasthan. This project is on a build, own, operate and transfer basis, and the letter of intent for this was received by the company on the 4th of September. And lastly, we have news on Bikaji Foods International that saw a bunch of large blocks of shares trade hands yesterday. So Lighthouse India Funds sold 32.42 lakh shares that represented 1.3% stake at rupees 480 apiece, and Plutus Wealth Management bought 13.5 lakh shares that represented 0.54% stake at 480.11 rupees apiece.
All right. There's also an update, interestingly, on the Class 8 trucks. Thanks, Saloni, for giving us those updates. The latest update, in fact, just before we started the show, the orders from US Class 8 trucks in the month of August has come in 28% lower year on year.
15,400. But what's interesting is, though it's lower by 28% on a year-on-year basis, on a month-on-month basis, we have seen an increase as well. So I think, if I'm not mistaken, this would be the highest in the last 4 or 5 months. So the trajectory seems it's going pretty good. So we should be watching out for a Ramakrishna as well as a Bharat Forge
So,
as well.
They will react in trade. So watch out for those. More updates from the primary market. It's seen a lot of action in the recent past, and Mika is joining in to give you the latest update here. Mika, what do you have for us today?
Good morning. So Jupiter Lifeline Hospitals will launch its initial public offering today, and the IPO will be live till September 8th. The multi-speciality hospital plans to raise 869.08 crore rupees via a fresh issue and an offer for sale. The fresh issue will stand at a size of rupees 542 crores, while the offer for sale is worth rupees 327 crores, which would offload 44.5 lakh shares. The price band is set between the range of 695 to 735 rupees per share, and the IPO proceeds will be used for the repayment of the borrowings from banks by the company and other general purposes. A little bit about the business. It was founded in 2007, and the company is a multi-speciality tertiary healthcare provider in Western India and currently operates in 3 hospitals at Thane, Pune, and Indore. As of March 31st, its total operational capacity included 1,194 beds and 1,246 doctors. The company is also currently building its 4th hospital in Dombivli, which will have a capacity of 500 beds. In terms of the company financials, Jupiter's revenue has almost tripled from FY21 to FY23. Its EBITDA margins have improved from 13% in FY21 to 22% in fiscal 23. And in terms of profit, the company recorded a 72 crore net profit in FY23 compared to the 22 crore net loss in FY21.
Right, so that's interesting to watch out for in terms of where Jupiter Lifeline goes. And overall, the IPO market has been buzzing as well, Alex. But clearly, the focus today is absolutely, thanks Mika for getting us these updates as well. But the focus today, Alex, is going to be absolutely with regards to the way the rupee has been panning out, the way oil has been moving, because you're going to see a direct impact with regards to where oil marketing companies go. Plus, you have your paint companies also that continue to see some bit of a downtick. last couple of trading sessions, you are seeing that already. That's been playing out with names like Asian Paints, Berger, all of them have been in focus as well. And that sector rotation that's happening is also very interesting because, again, you do have media which has started to pick up, logistic names that have started to pick up, and you have banks which have continued to underperform Nifty 50.
Oh, certainly. And of course, that overarching concern about the economic implications of higher crude and a weaker rupee. We'll get you all of those updates over the course of the day. We're at the end of this particular edition of Trade Talk. There's lots more coming up in just a bit. This is BQ Prime.